Okay. Hello, whoever is watching this. So I'm going to be going through the 2022 IB Accounting Final question 4, which is the manufacturing question. Um, so I'm just going to walk you guys through how to approach this question, um, what to look out for, the calculations, all that type of stuff. You could pause the video to see if you could work through it yourself, get the answers right. The answers are based off the official IB memo, so you don't think you have to worry too much about the question, the my answers being wrong. But this is just to walk you guys through it, uh, walk through a question, how you should approach a question like manufacturing. I don't think it's the most challenging section. There is a lot going on in the section, but overall, I think it is easier than a financial statement or a cash flow. So it is a place where you could start banging marks. So first thing to start off with, let's just read the information. They're a cheese manufacturing company that produces various flavors of cheese and sells them to the retail and restaurant sector from their own shop. Okay, first thing you could notice, own shop, right? Manufacturing deals with the factory, right? So what goes on in the factory. So they're maybe going to mention something about shop assistants. Shop assistants don't go in your factory overheads, right? The factory occupies, yeah, as you see, occupies 600 square meters and the administration office 200 square meters. So three-quarters is taken up by the factory and one-quarter is taken up by the shop. We're probably going to need that for when we're dividing electricity or rent or whatever in factory overheads. Um, their financial year ends on the 28th of February each year. The following balances were extracted from their financial records. Okay. So, first thing, we've got direct raw materials, and we could actually start answering the question here. 2021 opening balance was 143. 2022 opening balance was 151. So we know we can come to our opening balance and put in 143 immediately, right? Sorry, that pen is a little small. Make it a bit bigger. 143, 123. Perfect. So we could actually cross that out. We know we've done that. And we know this is going to be the closing stock, the uh, this part over here, less closing stock. And then don't forget to put this in a bracket, right? Because this whole the whole point of this table, this note, or whatever, production cost statement, is we're calculating the raw materials used in the production process. If we've got something on hand at the end of the year, closing stock, they're not being used. So we need to subtract it from what we used. So that's why we put the brackets there. Um, let's just go. And then I think we could start reading information now. It doesn't look like there's a work in progress note here, so don't have to worry about that. Don't have to put in those balances just yet. Let's just see. Okay. Credit purchases of raw materials amounted to, just get my highlighter, amounted to 146 250 and 78 750. Okay. So first thing we could do, it points us to the direction. We want purchases, right? Purchases. Cool. We could start putting in our calculation so long. 146,250, because that's our credit purchases, plus 78750. That's our cash purchases. But then we see here 16,000 Rand worth of milk, a raw material, so it's guiding you there a bit, was returned to the supplier as it was past its expiry date. Okay, if we returned it, it undoes the purchase, right? So we're going to subtract 16,000 from our purchases, right? Cool. And let's just see. The delivery of raw materials is outsourced to a refrigeration truck service for a set fee of 1250 per month. So remember, carriage is a separate thing. Carriage 1250. How many months do we have in a year? We have 12 times 12. Okay. And we see nothing else here. It says indirect materials. We don't deal with that at the moment. We're dealing with direct raw materials. Let me actually just write here, aka direct materials. Okay. Same thing. Just so you don't get confused if you get one or the other. It says nothing more about our purchases, so we've actually finished this note, so we could start calculating immediately. 146,250 plus 78750 minus 16,000, get 209,000. Our carriage is 1250 times 12, 15,000. Nice and easy. Calculate all of this. 143 plus 209 minus 15,000 minus 1. Ooh, why am I minusing 15,000? Should be plus 15,000 minus 151,000. 216,000. Perfect. 8 marks. Very easy, very straightforward. Only calculation is really this times by 12, and we subtract the spoiled milk because it's no longer a purchase. Pretty easy. Nice 8 marks. Now factory overheads, this is 19 marks. This is where the bulk of the marks comes in. Indirect materials, let's come to our indirect materials. Over here, it's talking about our indirect materials. D is the only thing talking about indirect materials. And then we've got a closing balance for indirect materials and an opening balance for indirect materials. So let's work this out. It says indirect materials purchased during the year amounted to 62,000. 10% of all indirect materials are used in the administration offices and the shop. Okay, so that's basically telling us that once we calculate the indirect materials expense for the year, we times it by 90% because we only used 90% of it because the factory only used 90%. The other 10% has been used by the admin offices and the shop. So come to indirect materials. We have our opening balance. It's the same logic as our raw materials. Our opening balance, 27,000. What was our purchase? 62,000. What is our end of year balance? Our closing stock, 19,000. Times by 0.9 or 90%, whichever you prefer. And then you get 63,000, right? So just a piece of advice is when you see questions like this, I've often seen students, they will take the 62,000, times it by 90%. So they'll go 62,000 times 90%, but then take the full amounts of the opening and closing balance, which is not correct because 10% of, it says here, all indirect materials are used in the administration offices in the shop, which means the opening and closing balances, 10% of that is also not being used in the factory. So you calculate your whole expense for the year with your opening balance, purchases minus closing balance, then times it by whatever percent it is, 90% or 15 or 85%, 80%, whatever. Cool. Now we're going to go to indirect labor. So what we must be careful of is indirect labor is not people working in the factory. So if we come here to labor, the factory employs 4 workers. Those are direct workers. This is direct labor, right? Let's make it a bit nicer. Let's also, sorry, this one's also a bit small. Direct labor, okay? A factory supervisor is an example of indirect labor, okay? So it says the factory supervisor and both shop assistants earn the same and cost the business a total of 432,000. Perfect. So let's go to our indirect labor, 432,000. But the factory supervisor and both shop assistants, that means so this total cost is for all three of them, right? The shop assistants and the factory supervisor. But we only care about what's going on in the factory. It's called factory overheads, right? It's not called shop overheads, factory overheads. So we need to divide this by 3, right? Because the only indirect labor we care about for this production cost statement is the factory supervisor, who earns 144,000. Perfect. And then we could see here it's going to ask us for the direct labor a bit later on in the question. Not necessary now. Now we come to general expenses, which is probably what we're going to need for rent, water, electricity, insurance, and security. Okay? The following totals were extracted from the pre-adjustment trial balance. It's important, pre-adjustment trial balance on the 28th of February, 2022. Okay. So our rent expense was 110,390. But you see here, it says rent is paid 1 month in advance and was increased by 10% on the 1st of Jan 2022. The rent is allocated as per the floor space occupied by each department. Okay, this is quite a mouthful of a question, and it's a question that you'll probably see very similar types of questions or wordings in financial statements. But this is quite hectic. So let's go to our rent expense. So first thing, 110,390 is our rent expense. Now, what does that equal? It says rent is paid 1 month in advance. So they're basically telling you paid 13 months, right? Cool. But how many of those months had the increase is the question. Only one. Sorry. Let me draw a timeline. So this is Jan. This is Feb. This is 1 Jan, 1 Feb, and then I'm just going to say Feb 28. Okay. That means let's actually go 1st of March rather. 1 March. Okay, so they say 1 month in advance, right? So it probably means that they paid for the March expense as well. So that means 3 months had the increase. 1, 2, 3 months. So if we let X be the rent before the increase, you have 10 months of the non-increase rate plus X times 1.1 times 3 months, because this X times 1.1 gets us the increase rate times the 3 months, right? And then you could solve this however you want, but X turns out to be, actually just draw an arrow. X turns out to be, give me 2 seconds, sorry, I'm just calculating here. 110,390 equal to 10x plus 3. X is equal to 8,300, right? So now what do we do with this figure? We need to figure out how much was overpaid, because we can't be accounting for prepaid expenses in our factory overhead statement. But this amount is before increase. I'm just going to say BI, before increase. So to get the increase, we take 8,300 times 1.1, actually just 110% rather, and we get 9,130. Okay. Now all we need to do is take our rent expense amount, which was 110,390 minus 9,130, because this is the only month that was in advance, right? So it was the prepaid expense. So accrual accounting, we need to take it out, and then we get a 101,260, as this is our rent expense for the whole year. Now that was quite a mission, but we're not done yet, because the question clearly says the rent is allocated as per floor space occupied by each department, right? So we want the factory. Remember, if we come back up here, factory takes up 600, admin takes up 200, which means total space is 800 meters squared. So to divide it, we want 600 meters. We want the expense for 600 meters squared, but we've got the expense for 800 meters squared. So that gets us to 74945. Come back here, and then 74945. And then they can, even if you got this answer wrong, they would come see your rent expense working and you would get part marks. This is probably a 5, 6, 7 mark calculation. Quite a hectic one. But now we sorted that out. Yeah, sorted that out. Don't need to do much more there. Sorted out rent expense. Now let's look at water and electricity. Water and electricity, 3520. The factory uses 70% of water and electricity. Quite a simple calculation compared to the last one. Take 35200. We only want the expense that the factory uses times 70%. 35200 times 0.7 is equal to 24640, right? Brilliant. Let's actually just make this a little neater. Perfect. Insurance, 48950. Half the insurance cost belongs to the factory. Okay, half the insurance cost. That's important. The insurance premiums have remained unchanged for the year. The premium for Feb 2022 was not paid due to a bank error. Okay, maybe not as easy as we thought it was going to be. Let's come here and let's make a block for insurance. So the marker will come look here, and they'll see, okay, this is where he's doing his working, because it's a bit tough to do it all in that line. So we know that 48950 represents 11 months, right? 11 months, because they haven't paid February, and they said it remains unchanged. The rate remains unchanged. So it's quite easy. We take 48950 divided by 11 to get the monthly rate, right? 48950 divided by 11 is equal to 4450 per month. That means to get the full expense for the year, we take the full 48950 plus 4450, and we get a total of 53,000. Let me put it in my calculator. Can't do arithmetic in my head. 53,400. 53,400. But are we done? No. It says half the insurance belongs to the factory. So we need to times by 0.5. And then we get 26,700. 26,700. They'll once again come back here and look at the marking. Similar to indirect materials, do all the calculations, then times by the different proportions. Cool, so we sorted that out. E. An amount of 15,960 was allocated to the administration offices and shop for security. Security costs are allocated as follows. Factory, administration costs, shop, in the ratio 3:1:3. Okay, the way they've worded this question is actually quite tricky. So 15,960 is used for the admin offices and for the shop, right? So that means, so we see the ratio. Let me actually just put here security. We know the ratio from factory to admin to shop is 3 to 1 to 3. We know that this portion here cost 15,960, right? That's what they tell us, which represents there's 7 parts, right? 7 ratio. Like if you add all the ratios together, you get 7. So if 15960 represents 4/7, but we want 3 out of 7, right? So all we need to do, because we want 3 out of 7 because that's the proportion of the factory, right? All we need to do is take 15960 times, what do we want? We want 3 over what do we have? 4, right? We want 3, they have 4. And that gets us to 11,970. But this is a calculation we could actually do in this block. 15960 times 3/4 is equal to 11970. So it's a bit tricky here, but they told us that for the admin and the shop, it costs 15,960. So for just the factory, which is three parts, not 4 parts, it will cost 11,970. So that basically also means 11,970 is allocated to the shop, and then 3,000. If you take this figure and divide it by 4, that's how much will be allocated to the admin offices. A little bit tricky with the wording there, but just take it step by step, and all will be well. Cool. 19 marks there. Quite a bit harder than the raw materials section, I think, but still not impossible. Okay. Calculate the cost of direct labor for the year ended 28 Feb 2022. Come back here. Says the 4 employees each earn 8,000 Rand per month. So we can start the calculation. 4 employees times 8,000 Rand per month times 12 because it's per month. They're each entitled to a medical aid contribution of 500 Rand per month. So plus 4 times 500 times 12. And a pension and UIF contribution of 8% of gross earnings. So gross earnings, remember gross is before any deductions. So it's once again 4 times 8,000 times 12 times 8%, because we only want 8% of this. And why we need to add this in is because it's a contribution, right? The business is making a contribution to these funds on behalf of the employee. So it's not coming out of the employee's account, it's coming out of the business's bank account. And this calculation is for the cost to company. So how much it actually costs the company. So that's why we got to add it in. And then this gives us a figure of, let me plug it in my calculator quick. 4 times 8,000 times 12. Okay. Where did my Apple Pencil go? There we go. 438,720 is our direct labor cost. Not too bad, I think. Now, this question is maybe a bit tricky, but still not impossible. The cost of production affected on the production cost statement for the year was 1,013,784. Calculate the cost of sales for the year ended 28 Feb 2022. Okay. So all we need to do is the cost of production is basically the final goods that was sold. That's what we're working out. So we need to start with our opening balance for finished goods. 96216. Let me just move this up here. Plus the cost for the year. 1013784. Subtract our closing balance. Minus 124200. 1200. And then we have to come to our finished goods section. It's really nice that they've highlighted where we need to look for things. It says a sales assistant was caught stealing cheese while she was transporting it to the shop. It was determined that she stole 120 kgs of cheese at a cost of 65 Rand per kg. So that was taken out of our finished goods. We didn't sell that. It wasn't taken to the store. So we need to subtract 120 times 65, which becomes 7,800. Gets us to 978123. So the general form for these types of questions is finished goods opening balance plus your sorry, my voice is a bit sore. I need to find the it says here plus cost of production. Basically, it's like the cost of production of your finished goods, subtracting your finished goods closing balance minus any theft equals that. Because this is basically how much of the finished goods we actually sold, right? Because your finished goods are the things you sell. So if you've got finished goods on hand at the end of the year, that's how much you sold. And then obviously theft is not a cost of sale. It says here it was deemed as a selling and distribution expense, so therefore it can't be included in cost of sales. So that's why you have to subtract the 7,800. If the question had said this was deemed to be a cost of it, they just decided to include it in cost of expense, you wouldn't cost of sales, you wouldn't have subtracted it. But that very seldom will happen, so you just need to subtract any theft. It's really easy, nice 6 marks here. Okay. Then it says, explain why the work in progress balances are so low compared to the raw materials and finished goods. Is that true? We come look. Yeah, it is actually like it's a massive, massive, massive discrepancy between these two. But now we need to think of why that could be. And we must think about it in the context of our business. So why would the work in progress be so low? First thing that you could think of, sorry, there was a bit of a pause there, is our raw materials and our finished goods, they last longer. Like cheese can stay in the fridge for quite a while, and milk can stay in the, like long life milk lasts for quite a while, right? Then also, raw materials, they're perishable, right? Like they're used up. So with raw material, they can't get halfway through making cheese. So you would word it the production pro process must finish the run or half the completed cheese will be contaminated. So you can't start making cheese and then not finish, right? Otherwise, the cheese will be contaminated, which basically means your work in progress, just going to say WIP, would only be your wrappers, like the things you wrap cheese, only be uh, cheese wrappers or labels, stuff like that, which obviously you're not going to have a lot of. And the value of those things, like if you have a block of cheese, the value of the block of cheese compared to the label is it's quite a large difference. So you just need to think about it in the context of this question. So first of all, obviously your ingredients like your long life milk, I don't actually know what goes in cheese, but stuff like that, that could stay on the shelves for quite a bit longer. Your finished goods could obviously stay in the fridge a lot longer. You can't get halfway through making cheese and just stop. That's not really how it works. So you don't have any work in progress. That's why the figure is so low. Yeah, so as you can see, not a particularly complicated question. Factory overheads is maybe quite a challenging one, but I don't think anything you guys can't handle with a bit of practice. Hopefully my explanations make sense. Sorry if I spoke a bit fast, but hopefully you guys find use in me going through this question and just how I would approach it. Yeah, good luck with the rest of your studies, wherever, whatever point you are in your studies watching this. Bye.